everyone, I'm Kathy Lean with BK Forex. Fundamentals matter. I'm a big believer that when it comes to trading and trading well, you've got to incorporate the big picture, the fundamentals, and most importantly, central bank policy. Sounds difficult, right? I know many of you don't follow fundamentals as closely as I do. Now, you're welcome to read my reports on 60secondinvestor.com or get access to my fundamental heat map as a BK Forex member. But there's actually a very simple way to track fundamentals and predict Eurodollar movements. All it takes is a chart. This chart. You're looking at the Eurodollar, which is the orange line, and the 2-year German US yield spread, which is the blue line on a daily chart. And I want you to look at how closely these two mirror each other, where when the yield spread is falling, like it is here, the bears are in control, with Euro likely to fall. When the yield spread is rising, like it is here, the bulls are in control. It is very difficult for Eurodollar to rally if German yields are falling more aggressively than US yields. What's great about the yield spread is that you're letting the pros do the work for you, bond traders who are much more in tune with the market. So the next question you might have is, how do I create a chart like you, Kathy? Let me show you how to do this step by step. So first, let's just start with the generic Eurodollar chart. You may typically just have a candlestick chart, which is perfectly fine. I'm going to get rid of the other chart. And now we're going to add a comparison. We're going to compare it with the Deutschmark 2-year bond yield, which you can see, just write the symbol DE02Y minus US02Y. And so that's the German 2-year bond yield minus the US 2-year bond yield. So we click that and we hit enter. And hopefully it will draw. There we go. So we have the yield spread here. It actually added itself twice. I got a little impatient. So it doesn't look like what we want it to look like, which is perfectly fine because we need to fix the scale. So what I'm going to do is I'm going to pin the Eurodollar to the right hand side, and I'm going to just make it the regular quote. The orange line is already on the other side, and I'm also going to make it the regular yield spread quote. And if you want, you can change this to a more visible color like black. That will make things easier to see. So as you can see here, we just added the German 2-year yield spread against the Eurodollar, and can see how it predicted the price action on Friday. And what's really great, and one of the questions you may ask is, does this work for day trading? This is great, Kathy. You're looking at it on a daily chart for swing traders. And I have to say, yes, it worked brilliantly for day trading, especially on this past day, because when the U.S. markets opened, we had Eurodollar trading above 113. The yield spread started to fall faster, earlier, sooner than Eurodollar. And that basically predicted the Eurodollar falling from 113-ish all the way down to 112.38. So it was a very, very strong predictor of this price action. So can we use this can we use the yield spread to predict the price action for other currency pairs? And the answer is yes and no. So let's take a look at this. So going back to the daily chart, we're going to change this to dollar yen. Dollar yen itself, actually, and we're going to get rid of this yield spread because that's not the one we want. Dollar yen itself, all you really need is the 2-year US bond yield spread. That's good enough. And let me just pin the price action to the right-hand side now, the left-hand side now. And you can see from on this chart here, very, very strong correlation between these two instruments, where the yield spread, which is the orange line, is a leading indicator for dollar yen, and they basically move in lockstep. And you can even see that as we zoom further and further out in time. It also works for dollar CAD. If we do dollar CAD, I'm going to pull up dollar CAD here, and we're going to delete this, and we're going to add in the yield spread as we had earlier. So US02Y minus CAD 02Y, and we hit enter. That's the yield spread. We move the price to the right. We right click on it, pin it to the right scale. And you can see that the dollar CAD and the US Canadian yield spread also works very, very well as a predictor. So here it suggests that the yield spread is starting to tick lower, which may suggest that while we had a very strong move in dollar CAD on Friday, that it may hit a wall and that the price action may soon exhaust. For pound dollar, the 2-year yield does not work as well. And also, it's more or less because we also don't have, for some reason, TradingView does not have the 2-year yield. So instead, what you can use, let me just give it the Canadian yield, is the 5-year. And so we can do UK 05, gilt 5-year gilts. Let's see if we get that. I think it was GB 5 gilts. We found it earlier. I'll have to come back to you on that. I think it's UK 5-year bond yield. Oh, here we are. Well, we have found the US 05, and let's see if we can find the GB5Y. Okay. GB5Y. All right. Here we go. We finally found it. GB5Y. But I actually did not want to do that. I wanted to do the yield spread. So let's go to GB5Y. Minus the US 05Y. Enter. So that gives us the yield spread, the 5-year yield spread for the UK. And now I'm not sure why it pinned itself in the bottom, but you can even see here that they pretty much are mirror images of each other. In this sense, you see the yield spread over here peaking down here in pound dollar earlier than the price action peaked. And similar cases over here, and this one bottomed out before the price action bottomed out. And so what this tells us is that we had a very strong rally in the yield spread down here over the past couple of weeks, and pound dollar has not necessarily responded to that. And so I think it's just a matter of time that it will. I use fundamentals to trade Forex every day, and if you want more information, visit bkforex.com.